Hello friends, welcome to my channel and thanks for watching this video. Friends, one more week has just gone by and we are now looking at another series of how the US market has performed in the past 1 week and how it will probably perform in the next or in the upcoming week. So what we have here, let's check out some quick news. About the market, this is the one I think which is make some relevance that markets no long fear inflation and stock will continue to rally, HSBC says. So let's look at couple of the key points first, then we will go back to our market analysis. So in a note Thursday, Chief Investment Officer Jiang Shan said that after a period of concern about persistent higher inflation, market appear to have gotten used to the concept. Arguably, markets are now focused on the state of play regarding COVID and in particular the spread of the Delta variant. HSBC is still investing in equities, particularly in sector directly exposed to consumers such as consumer discretionary. Then we have financial and real estate. Now, I've been saying one thing again and again. The most important thing which differentiate any bull market to other phase of the market is growth. If we have inflation along with high amount of growth or at least decent amount of growth, it will be considered as a bull market, and stock market or the market participant will focus more on growth rather than on inflation, because when growth is there it means people want to purchase, so it will factor in. If you don't have growth but the inflation persists, then it will be a different scenario. But right now we have inflation and that coincides with the growth, so this scenario is completely different, right? Now here we have, if we check out the market closed on Friday, as far as the Dow Jones, Nasdaq, S&P, everything closed in green, even though by smaller fractions. And probably gold is trying to try to make a smaller amount of support after being fall quite drastically, or I would say a freak show that has happened last week. And then oil cooled off a bit. We have lower 10-year yield, which is trading at 1.28, and most importantly we have our DXY or the dollar index, which is quoting at 92.5, 92 and a half. So it falls a bit, so this is a very good sign, because whenever DXY falls, it's not only about the global market but US equity market tend to rise, right? Now let's see, or let's start with the Dow Jones chart. So here we are. I think, as I've been saying this thing again and again, probably this is one of those final attempts which the dollar index tries to make. And if you are looking at the chart, you will see it is now consolidating. It looks like that it is in a range, and the range looks something like this. So the upper end of the range is 32.21, and here we are 93.44, 93.21 and 93.44 and 93.5. This is the upper end of the range, and as far as the lower end of the range is concerned, it is in between 90. It is in between 89.67 and 89.2. So this is the lower end of the range, and it's completely in consolidation until and unless it makes a move beyond the range. So this is one thing. Now last week I posted a comment on my YouTube that don't try to short the market. Okay, I don't know how many people actually seen that, but if you are trying to short the market thinking that what else do we have or what is left, the question is not the question is actually not what is left in the market, but are you left out or are you in the market? So this is the big question, because if you're trying to find out what makes the market moving, probably you don't get a reason, but most of the time you definitely have reasons why the market should fall. Okay, so this has happened for the last 50, 100, 150 years. And most importantly, uh, if your mind is not relaxed, if you never started fighting, in your colony, or your neighbor started fighting around you, you will feel disturbed and you will think that this will probably the reason. And this is a matter of the fact, if you analyze, or if you just think about the price and how it has been moving in the market, irrespective of what the hell is going on in the economy, in the country. I'm specifically talking about market, because people tend to correlate other things, or uh, other happenings or findings directly the market that may or may not play out. So if you want to read the market, don't read other things. And if you want to, or if you try to correlate the market with other things, so you need to understand the pros and cons about that. Now, as far as the market, or as far as the trends are concerned, you can see how the market looks like. And so this is the trend. Okay, this is the trend, and it is very clear that Dow Jones is making higher moves, and we don't find any sign of respite or any sign of weakness. So on the downside, you have 34,690 as your big support, and your or the upper end of the range will be in between 37,800 and 38,700. So there is lot of things which are yet to become, right? Now let's go and check it out, the Nasdaq. Now if both the index works out well, the combination we can see on the S&P, right? So what we have here, and I have said this thing in my last week's video, that the Nasdaq, when it starts moving, it is just in the earlier phase, so the momentum is yet to kick in. Even Nasdaq has moved by I think beyond 14,200. It is now trading at 14,800, but the real momentum is not yet started. Once that started, you will see October 2020 to January, February 2021 kind of moves. So that is yet to be seen on the market. So be ready for that and place yourself accordingly. So here we are. The big support we have here is 14,260 on the downside, and on the upside we have a very big range which is yet to be seen. So it will be in between 17,000 and 17,700. So we have lots of ground to cover on the upside. So one thing is, whenever you are in a bull market, you cannot trade the market, because it's very hard to trade a bull market. Because so whenever you are in a bull market, the stock will consolidate, make 1 or 2 days of big move, and again enter into consolidation. So remember, when you are in a bull market, you need to play the entire swing to take the maximum benefit, or to take the end to end profit out of it. If you want to do in and out kind of thing, bull market will never helps you. So this is one of the important things that you need to understand here is. Now we will go and check it out how the gold futures have moved. So as you can see, there is a sharp volatility that we have seen in the price chart of gold. Here we are, and the gold has exactly taken support where it has previously taken in the lows of March, April 2021. So currently 1680 will be the range of support, and on the upside we have I think 1920 or 21 will be your target, or the resistance. But the important thing to talk about is the silver one. Okay, although silver is also in consolidation, but the thing is, it is more like a flat chart instead of a gold which is going down. Okay, so if you are looking at the chart of silver, what you can see here, in that case you will see that it is more like into a consolidation, where in gold it is sliding on the downside. So what we have here as far as the gold price is concerned, so you have 22.3 and 22.69 or 7 on the downside, and on the upside we have 29 and 29.9 or 30. So this is the range in between which the silver is trading, which means the way trend is, or trend has been made, or the way both the commodities gold and silver has been trading, silver looks like it is in a more, it has more in strength when compared to gold. So that's the most important thing which you need to understand here, is how both the commodities are trading and which looks and easy to trade, where silver fits the criteria, right? Most importantly, you have lots of things that is in the favor of equity market. You have oil which has been consolidating after correcting a bit. We have US 10-year bond yield which is in a correction and it is not moving. We have a dollar index which again started moving on the downside. You have inflation where the fears get settled out, and if US market continues to post good numbers, then we will see market tend to rise irrespective of what's been going on in the economy or in the other places of the world, within US or outside the US. So if you want to focus on stock market, focus on stock market, don't focus on other things. And if we do ignore the positive and negative aspects, the one thing which looks very clear is the index and the trend, and it is saying that it is on the upside, so don't try to short the market. So this is the end of the video. If you like this content, do share your thoughts in the comment section and subscribe my channel. Lastly, take care of your family and friends.